Hello Mavericks and welcome to today's currency recap. It is Thursday, March 7th. So as always, we'll be doing a review of the trading day, taking a look at any meaningful news from the day. We'll be examining the broader equity markets and taking a look at a couple select commodities as well. We're then going to pivot to some current market analysis. We're going to look at a price chart of the S&P 500, take a look at our proprietary currency baskets, and see if there's any major news events to end off the week. And of course, as always, we're going to look at some potential currency trade opportunities and setups in the making. Let's get right to it. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you are a technical trader with a technically based trading system, we want to meet you. So please click the application link in the description below this video. Now let's break down today's market action. So let's start things off with some market analysis. All right, so my comment from last week stands, which is that risk on appetite continues. What's changed, however, is that the dollar has finally broken down, and this sharp downside momentum we've seen over the last 2 days now puts NFP sharply into focus. Are we going to see a continued slide in the dollar's fortunes, or will we see a snapback rally? All right, so in terms of overall market performance, gold slightly down, gold slightly up, oil slightly down, crypto leading the way, and stocks having a very good day indeed. Again, we'll see if this risk on appetite continues in the wake of tomorrow's NFP report. Given how oversold the dollar is and how overbought everything else is, it wouldn't be shocking to me if we saw some kind of mean reversion trade. So today's biggest loser was by far the dollar. The yen up a little bit, the Aussie up, the New Zealand dollar up, pound mostly flat, and then the Swissy, the euro, and the Canadian dollar slightly down on the day. As far as cryptocurrencies go, it's Bitcoin Cash that's led the way, but Bitcoin, Ethereum, and Litecoin all had excellent days today as well. All right, now if we take a look at our chart of the S&P 500, you can see that we're still sticking with a clear +3 score here. Not much more to add. Made a new all-time high today. Again, until the market really starts to break down, which it will, this rally will not go on forever, and it is one of the more impressive sustained rallies I've seen. But yes, as of right now, nothing has changed from our outlook. We remain at a +3. And in terms of tomorrow's news events, we have that NFP report and some other inflationary reports having to do with employment out of the US and then also out of Canada as well. So we'll have to see here. It's especially interesting because the ECB has essentially stated that they're seeing inflation come back within their target range. So it really does put the Fed's comments into perspective here, especially, what we saw was a slightly dovish comment from Powell, which is what's been responsible for the dollar weakness. Dovish in the sense that he's reiterated his stance that we are going to see rate cuts this year. It's just a matter of when. And the Canadian, the Bank of Canada was a little bit more hawkish in their comments, saying that they don't see a reason to cut rates quite yet. So although I would argue the substance of the messaging from all these central banks is roughly similar, the market's reactions to them have been a little bit different. Okay, now as we take a look at some currency analysis, on the velocity score side of things, crypto pretty much +2, +3 across the board. The Aussie dollar clear outperformer today as far as velocity goes, but in the strong, healthy +1 column, we still have the euro, the pound, and the Kiwi dollar. And then on the opposite side of the spectrum, the dollar is at a clear -3. So with that in mind, let's hop over to TradingView and take a look at some of these currency baskets. All right, so the yen has had a nice rally. Now, I pointed out this trend line from last week, and we did clear the trend line, but I don't like this long upper wick on that bullish candlestick. So we'll see if tomorrow this wick gets filled with some additional yen strength. But my hunch is that the yen is going to roll over again. So I'm looking for some short yen opportunities, more so as a day trade for tomorrow. Dollar's broken down really nicely. This now looks like a very clear head and shoulders pattern, but we are coming into some support down here from the lows from the end of January. So although the dollar, and I suspect whether it's an overnight action or the initial surge of volatility from NFP, I'd expect that if we do tap into this demand region, support zone, whatever you want to call it, in the dollar, I would expect some dollar buyers to step in. So that's going to be an interesting trade tomorrow. The Swiss franc, not much to say here. We've tapped into this previously unmitigated demand zone, but the bullish reaction has been a little bit lacking here. So I'm not too interested in the Swissy. Euro, you see this long lower wick, that's from today's ECB comments and the hold on rate cuts or increases. But yeah, this price action just isn't all that interesting or noteworthy to me. So like the Swissy, not interested. Pound, we finally cleared this resistance area. Let's see if we can treat it as support. If we can, it'll put these highs from August 2023 into focus. So very interesting to keep an eye on the pound there. The loonie finally broken down, as I've been calling for some time now. I'm expecting to ride the Canadian dollar down to the 2023 lows from December. And then the Aussie dollar trying to break out. Hey, this is pretty encouraging news. And we actually, for the Aussie dollar that is, and we have this nice little inverse head and shoulders where we're just breaking out the neckline. So yeah, let's see if the Aussie can continue its upward momentum. If it can, the next target, similar to the Canadian dollar, but the other way around, are the highs from December 2023. And then finally, we have the Kiwi dollar here. It's really just not doing much. It's in the middle of the range. It's best left alone and ignored, in my opinion. So traders, there you have it. In conclusion, as always, play relative strength and weakness. It is by far the highest probability method there is to consistently be on the right side of these currency markets. And of course, it goes without saying we should always be paying attention to proper position sizing and following our trading plans. All right. Oh, and please join us tomorrow morning, 6:15 to 6:45 a.m. That's Mountain Standard Time. So that would be 8:15 to 8:45 a.m. Eastern Standard Time. All right. Thanks for watching. See you guys soon. Bye for now.